Welcome back to High Net Worth Living, where we explore high net worth living and the wealth management strategies that allow the rich to grow and protect their wealth. Today, we're uncovering the world of offshore banking, a term that sparks intrigue, sometimes even controversy, but holds some of the best kept financial secrets of the wealthy. What exactly is offshore banking? Why do so many wealthy individuals and companies use it? In this video, we'll explore everything you need to know about offshore banking, from how it works, to the advantages it offers, and the reasons high net worth individuals choose to manage their money overseas. Let's get started. What is offshore banking? To understand why the wealthy often turn to offshore banking, it's essential to first understand what it actually is. Offshore banking refers to the practice of keeping money or other assets in banks located outside one's home country. This can include countries with strong financial privacy laws, favorable tax rates, or specialized services that appeal to high net worth clients. Banks in places like Switzerland, the Cayman Islands, Singapore, and Luxembourg have long been known for offering these services, allowing clients from around the world to manage their wealth internationally. Contrary to popular belief, offshore banking isn't inherently about hiding money. Rather, it's a legal practice that offers unique financial benefits. Most offshore banking is done through accounts that are fully reported to the home country's tax authorities, making it a strategy that emphasizes privacy, security, and flexibility. In many cases, offshore banks provide access to high-quality financial services, foreign currency holdings, and access to international investments that aren't easily available through domestic banks. Why offshore banking appeals to the wealthy? Now that we have a basic understanding of what offshore banking is, let's discuss why it's so appealing to high net worth individuals. Offshore banking offers several advantages that align perfectly with the financial goals of wealthy individuals, namely wealth preservation, tax efficiency, privacy, and global investment opportunities. For many high net worth individuals, preserving wealth across generations is a core goal. Offshore banking offers several tools for wealth preservation. For example, many offshore jurisdictions have stable economies, robust banking regulations, and deposit insurance programs that protect account holders' assets. In countries with political or economic instability, having offshore accounts offers an added layer of security and a safe place to store money. This protection can also apply to legal matters, as many jurisdictions offer robust asset protection laws, making it more difficult for creditors to seize assets held offshore. Tax efficiency is another major appeal of offshore banking. Some jurisdictions, known as tax havens, offer lower or even zero tax rates on interest earned in bank accounts. While tax laws have become stricter in recent years, wealthy individuals can still use offshore banking to legally minimize taxes on investments or business income. By keeping wealth in low-tax countries, the affluent can maximize after-tax returns, though it's important to note that proper reporting to home country authorities is often required. In some cases, high net worth individuals might choose to become tax residents in another country altogether, allowing them to take advantage of favorable tax treatment on income, investments, and even inheritance. This is known as tax residency planning, and it often goes hand in hand with offshore banking. Privacy is another significant factor driving offshore banking. Many jurisdictions with a strong tradition of financial privacy, such as Switzerland and Liechtenstein, have strict laws that protect account information. While these laws are not absolute, they still offer higher levels of privacy than most domestic banks. For wealthy individuals, this privacy can be invaluable. Privacy laws can shield their wealth from public records, protect their families from unwanted scrutiny, and reduce the risk of becoming a target for fraud, kidnapping, or extortion. It's worth noting, however, that in recent years, international regulations such as FATCA and the Common Reporting Standard, CRS, have increased information sharing between countries, making it harder for individuals to avoid disclosure to tax authorities. Despite this, offshore banking remains an effective way to enhance privacy. Advantages of offshore banking for high net worth individuals. Now that we understand why offshore banking is attractive, let's dive deeper into the specific benefits that offshore banking offers for high net worth individuals. Offshore banks often provide access to a wider range of international investment opportunities than domestic banks. For instance, banks in Hong Kong, Singapore, and London can offer investments across Asia, Europe, and emerging markets. This is particularly beneficial for investors looking to diversify their portfolios with global assets, including international bonds, real estate, and private equity. By banking offshore, high net worth individuals gain access to exclusive financial products, such as private equity funds, hedge funds, and emerging market investments that aren't available in their home countries. Offshore banking allows wealthy individuals to hold money in different currencies. This is crucial for those who have investments or business dealings in multiple countries, as it provides a hedge against currency fluctuations. For instance, an investor might keep part of their wealth in US dollars, euros, or Swiss francs to protect against currency risk and potentially benefit from favorable exchange rate movements. Holding multiple currencies can also open up currency arbitrage opportunities, where investors can capitalize on exchange rate differences. Having funds readily available in different currencies can be a huge advantage for those who travel frequently or have global business interests. One of the most valuable benefits of offshore banking is asset protection. By keeping assets offshore, high net worth individuals can shield their wealth from potential legal disputes, creditors, or even governmental claims in their home country. Many offshore jurisdictions have laws that make it difficult for creditors to pursue assets held within their borders, especially in cases of frivolous lawsuits. This doesn't mean that offshore banking is used to evade legitimate debt obligations, but it does mean that it provides an added layer of protection, particularly for those in high-risk professions or industries. Offshore trusts and foundations can be set up to manage these assets, adding an additional layer of legal protection. How offshore accounts are set up. How do the wealthy go about setting up an offshore account? Opening an offshore bank account is similar to opening a domestic account, but with additional layers of due diligence and legal requirements. Here's a step-by-step look at the process. The first step is to choose a jurisdiction based on financial goals. Switzerland, Singapore, and the Cayman Islands are popular options, each offering different advantages in terms of privacy, tax benefits, and investment opportunities. Some might choose Hong Kong for investment access to China, while others may select the Isle of Man for enhanced privacy laws. Each jurisdiction offers something unique, so the choice will depend on the individual's needs. Next, the individual chooses a bank and decides on the type of account. Offshore banks offer several types of accounts, such as standard checking accounts, savings accounts, and investment accounts, as well as more specialized accounts for specific needs, such as escrow accounts or multi-currency accounts. Setting up an offshore account requires navigating international compliance laws, particularly for individuals who are US citizens or residents of countries that enforce strict tax reporting. Banks may request information about the account holder's income sources, financial background, and expected account activity. This step ensures that the account holder complies with international financial regulations, such as the Foreign Account Tax Compliance Act, FATCA, for US citizens, or the Common Reporting Standard, CRS, a global standard for financial information exchange. Finally, the account holder makes the initial deposit. Some offshore banks require high minimum balances to open an account, making them more exclusive. These balances can vary widely, from a few $1,000s to several $100,000, depending on the bank and jurisdiction. Account maintenance involves regular reporting to the bank, and often to the home country's tax authorities. Wealthy individuals typically work with financial advisors or wealth managers to ensure compliance and manage the complexities of offshore banking. Legal and ethical considerations. It's worth noting that while offshore banking is legal, it has ethical and legal considerations. Many people associate offshore banking with tax evasion or other illicit activities, but in reality, offshore banking is legal when done transparently. However, transparency is essential. Offshore account holders are generally required to report these accounts to their home country's tax authorities and pay applicable taxes on any income earned. Over recent years, international regulations have increased transparency and accountability in offshore banking. Initiatives like the Common Reporting Standard require banks to disclose account information to tax authorities, reducing the chances of tax evasion. High net worth individuals who use offshore banking responsibly prioritize compliance, ensuring that they're using these accounts for privacy, diversification, and financial strategy rather than secrecy. Who uses offshore banking today? Offshore banking isn't limited to just billionaires and celebrities. Many business owners, retirees, expatriates, and even digital nomads use offshore banking to meet various needs. Business owners with operations in multiple countries often use offshore accounts to streamline finances, while expatriates might use them to manage currency exchanges.